Hello, welcome. This is the Protingent 2026 open enrollment. It will take place from August 7th through August 24th. We'll be covering all the benefits here very, very quickly, but I will draw your attention to the QR code in the lower left corner. It will take you right to the employee benefits website, which is going to be comprehensive and have all the detailed information in case you're left with some questions after we get done today. So we'll just jump right into it today. Again, open enrollment begins August 7th, runs through the 24th. This is a passive enrollment, so if you're already covered by the benefits and you're not looking to make any changes, you don't need to do a thing. You're just going to be automatically enrolled, and cards and everything will go out to you as needed. But however, if you've had any changes come up, changes in address, you bought a house, you got married, you got divorced, you've changed location, or whatever it happens to be, make sure that you log in, make sure that your information on file is the most current, and that way cards go to where they're supposed to be, communications go, and then there's less chance, it gives us the biggest opportunity to avoid any disruption. So again, your HR folks, Danielle Aguilar and Brent Hansen, are available at any point at hr@protingent.com to answer any questions you might have on those fronts as well that you don't get from the benefits website. I'm the old guy in the bottom right corner. My name's Blair Panzer. I'm with your team at LBG Advisors. We are retained by Protingent to help with all things benefit related. So you have exceptional benefits and backed up by customer service departments, but Jason and I and Chris Kirkpatrick are there by the stand ready to help you when things get a little bit more frustrating or you feel like they're not being resolved through the customer service channels. So eligibility. You need to be eligible for all these benefits. You need to work at least 30 hours or more per week. Again, HR and payroll will help guide you through that if you have any questions on that front. Dependents are going to be legally married spouses, same or opposite sex spouse. Domestic partnerships still covered under this plan, even though not required anymore since the Marriage Act came in. But Protingent always stands by and wants to support the diversity in their employee membership. So eligible dependents are covered up to age 26. That's pretty standard. Again, any questions, just always bring that up to your HR department, so that it's always better to measure twice, cut once, and not be caught surprised. So the overview, we remain with two plans, a $2,000 deductible PPO running on the Cigna National Network. So very broad coverage there. We'll get into some of the details in a little bit. We also have a high deductible health plan, which is HSA compliant. The HSA option is and accounts are offered through Fidelity. That deductible is $2,500, and again, we'll cover more details a little bit later on. Two dental plans. MetLife is more of the traditional dental that everybody's familiar with, and that's good with any dentist anywhere across the country. It'll work with any dentist. They're not all in network. More to come later. And Willamette Dental is a regional dental, but a very rich option, and where it fits is a very good option if you're one of these folks who has come across a situation where you need to get more work done. It happens, especially as we get a little bit older. Vision, life, accidental death and dismemberment, hospital accident, critical illness, EAPs, pet insurance, legal, fraud and identity, All of these are available through MetLife. You'll see those on your open enrollment platform. Also offered HSA accounts, which are pre-tax, tax-deferred, tax-free on the way out if you use them for qualified medical expenses. 401k, and all offered through Fidelity. Great layout of benefits. So we will jump into benefits here shortly. Lucent Health, and how does that relate to Cigna? Lucent Health administers the Cigna network. So technically when you're going into the doctor, they're going to ask for your card, and they're going to consider that your health plan is run by Lucent Health. And this is the contact number here. That's going to put you into customer service concierge, the 877-236-0844. Always call that number. They are great. They go above and beyond typical customer service, and will help you even right down to appointment setting if you require that. So two plans remain in place, your choice. The Cigna PPO is the lowest deductible of the two at $2,000. Again, it's copay driven. So the $2,000 deductible, like house insurance, like auto, is there, and is the big speed bump that you're going to be responsible for, but it's typically reserved for more significant situations, inpatient stays, or imaging and that nature. So for all of your predictable stuff, your routine or specialist, all your professional care is going to be copay driven, and those copays on the Cigna PPO are in lieu of the deductible. So you don't have to incur the deductible to go see your doctor. Access to care and getting care when you need it, and you're not avoiding it because of a large deductible. That's the idea behind the design. So there is care and coverage across the country, in and out of network. The Cigna network is one of the largest in the US, but out of network, sometimes it arrives where you have no choice, or you tend to choose a provider that's out of network, still covered. Your best coverage, obviously your best lowest cost coverage comes within that Cigna network. The HSA plan, high deductible health plan, it's qualified. You have a $25 individual deductible. The HSA is offered through Fidelity, same as your 401k. And again, it has a higher upfront cost because that deductible has to be satisfied before any benefits are paid out. The one exception to that rule is your preventive care. So the advantage of it, we get to put money away on a pre-tax basis and lower our tax burdens in April. However, different design. This is one typically that people will say, if you're relatively healthy, choose an HSA. It'll allow you to grow money on a pre-tax basis. It'll allow you to roll that money over based on Fidelity's offerings. And again, it allows you to save for a rainy day and have lower costs up front than you would normally. So if you're somebody with chronic and ongoing issues, maybe you want to select a PPO that has access to care for a simple copay. But if you're healthier and you're more interested in the allure of the rollover account and the tax savings, tax favorability of the HSA, choose the HSA. So health savings account, again, paired with the HDHP plan, the HSA plan, can be used to pay for both near-term medical expenses and expenses in retirement and carry unused funds year over year. That account is yours. It's essentially like a medical IRA. So the limits that you're allowed to put away for 2026, if you have individual coverage only, you're able to put away $4,400 up to $8,700 and $8,750 if you have family coverage or any kind of dependents covered under your plan with you. If you're over age 55, like myself, then we also benefit from having $1,000 catch-up amount on top of that, so $5,400 and $9,750. So very liberal limits on that front. So medical plan options, just in a nutshell, we've kind of touched on it. The Cigna PPO plan, $2,000 deductible if you're an individual or employee only coverage, individual only coverage, times 2 if you have dependents on the plan. No more than 2 deductibles for any number of people on the plan. If your family has 10 people or 2 people, it's going to be a $4,000 deductible. So the good thing about that, again, max out of pocket is $4,000, $8,000, and again, that maximum out of pocket number includes all your copays for pharmacy and for medical. It includes your deductible, and then the cost sharing, the co-insurance, which you see on the bar below that. So in a major event, you're going to be admitted to the hospital. You have a $2,000 deductible. You'll satisfy that first. Then the plan starts paying 80% of all your bills, and that occurs until you hit physically $4,000 out of pocket. Once you hit $4,000 out of pocket, the rest is covered at 100% for the remainder of the year, not the remainder of the event, the remainder of the year. So again, if we're looking at a dire situation, which we all know people, or we've gone through ourselves from time to time, instead of $500,000 in coverage, you're going to be limited at $4,000 and receive the care that you want and have the provider selection that you want that's very broad under the Cigna network. So preventive care, again, is the one exception here on both the PPO and the HSA. It's just covered. The ACA required that all preventive care be covered just at 100%. So in network, you got to stay in network to get the 100% benefit, but there is no copay, there is no nothing. You just show up for your preventive care visit and you will be covered at 100%. Physician care on the PPO, $30 covers any physician, and whether it's a primary care, OBGYN, or a specialist, it's all a $30 copay. That is deductible waived. We don't have to incur and pay the $2,000 deductible. We just go in and it's done. Specialist and urgent care, urgent care is a $50 copay. Again, same arrangement. Lab and x-ray, diagnostic lab x-ray, things like MRIs, CT scans, PET scans, all of those are all going to be covered deductible first. Those are less frequent and typically less regular services. So I know for some of us, we get them quarterly, but those are going to apply to the deductible. All the routine and professional care, again, is copay driven. So hospital services, we are at 20% after the deductible. And emergency room is a $200 copay per visit. Just again, when you get a chance to, I'd elect an urgent care that's local and convenient over an emergency room, but we don't always have that choice. So over and on to the HSA plan, slightly higher deductible for individual care. It's a $2,500 deductible with a $4,425 max out of pocket. That's a relatively low max out of pocket. But very good. And again, if you cover even a single child or a spouse, then you're going to move to a $5,000 family deductible. That's the way those plans are set up. Preventive care, again, is 100% covered. Everybody gets a preventive care visit every year. And again, no cost for that. Other than that, every other service you have, whether it's professional, lab x-ray diagnostic, or facility driven, everything applies towards that deductible and ultimately towards that maximum out of pocket of $4,425. So once we hit the max out of pocket, again, coverage switches to 100% for the rest of the year, no copays or any other costs for you on that front. Medical contribution rates. You can see them here. And again, any other questions on this, reach out to your HR department or payroll just to make sure everything looks right and is coming out of your checks correctly. So, how do I find a provider? Another page full of QR codes. Again, this is going to be posted on the Employee Benefits website, so sometimes the QR codes are very convenient. But we've got Cigna providers, frequently asked questions, and then the Lucent Healthcare app that's going to allow you to track all of your visits and claims and health matters. So, pharmacy benefits. Pharmacy benefits are offered through Kroger prescription plans. You do not need to go to a Kroger facility or pharmacy. The Kroger network is operating on the same backbone as every other pharmacy care provider out there, and there's about 180,000 different pharmacies, all online, so you can use the pharmacy of your choice. So. They offer a few different services. They've been very, very good with follow-up and customer service. Offer things if you're on specialty plans. There's a number of plans we have available, or a couple of different services we have available through the benefits here. But Kroger offers their BioPlus specialty pharmacy plan. There's mail order if you have ongoing regular prescriptions. Again, it's the typical 2 times copay to give you a 90 to 100-day supply. And everybody's got a member portal, so Kroger as well has the Kroger member portal right there at kpprx.com. So just in summary, it wasn't listed with the medical plans, but these are the pharmacy benefit designs for the Cigna PPO. $15 generics times 2 if you do mail order for a 90-day supply. Preferred brand names are $45 and non-preferred brand names $75. But you're capped, and that's it. Typical brand names out there these days cost on average about $600. So a $45 copay is paying about 6-7% of the total cost on average. So the HDHP plan, the HSA, just want to point out, even though a copay is listed here for generics, again, remember, everything aside from preventive care is driven towards that $2,500 deductible, or the deductible first. So the $20 copay for generics on this would kick in after you've met that deductible. Then the benefits get paid out. So then we would have $20 copay for generics. Other than that, everything just remains at the 80-20. The plan is going to cover 80% of the cost. You pay 20% for preferred brand names. Specialty drugs are handled the exact same way on both plans. There's also a plan through Payer Matrix where we may be able to get you your specialty drugs at vastly reduced price, sometimes even free. Dental benefits, choice of 2. Again, the whole theme here is to try and provide a broad array of benefits so that you can kind of custom tailor, pick and choose the plans that best meet your needs this given year. So MetLife traditional plan, Willamette Dental Group is a regional carrier. It is a dental HMO, if you will. They have their own providers, but it is a very rich plan design. So if you're looking at major services being done, root canals, bridges, dentures, orthodontia work, they're worth looking at to have and it could save you a bunch of money. So MetLife, again, PPO plan, again, it works with any qualified dental provider across the country, but in network, your dollars go farther. The agreed upon prices are lower, so your maximum annual benefit goes farther, and they also eliminates the option for the dental provider to balance bill you, to ask for more money over what MetLife will reimburse them. So, but you can go to any dentist anywhere with that. Willamette Dental, HMO driven, you're going to use a Willamette Dental provider at one of their facilities. Washington, Oregon, and Idaho driven, but very rich. Everything is copay driven here. You need a root canal, we need a crown, all copay driven. Kind of a unique setup, and no annual maximum. So no deductibles, no annual maximum. Very rich. Here's a brief side-by-side just so you can see it. MetLife, again, preventive care is always covered at 100%, but if we get outside of that and we get into routine care, we need fillings, we need teeth pulled, we need root canals, we need crowns, things of that nature. There is a one-time $50 deductible per participant, typically capped at 3 per family maximum. So if you cover 10 people, we're still only get 3 $50 deductibles. Other than that, we have $3,000 worth of annual maximum benefit. That's great. The typical standard out there in the market is 2. And we want to make sure that rich benefits are provided. So preventive care, 100% covered, as we were saying. Basic services. This is where fun and games, people can get into fun and games. Sometimes they move periodontal and endodontic down into major services. So it looks like rich coverage, but they've shifted things around, so it's not so good. That's not going to happen here. Root canals, crowns, things of that, not crowns, sorry, root canals and periodontal work, oral surgeries, all of that is going to be just considered basic services, which is great, and you get the 80% coverage. So you pay the $50 to have access. That only happens once a year, and then the plan will cover 80% of your bill. You stay in network, and that's it. There is no balance billing, and your 20% is on a reduced network agreed upon fee for those services. So major services, again, those are the bridges, crowns, dentures, inlays, onlays, anything related to those services, and that's pretty typical 50-50 coverage. Orthodontia is a $1,000 lifetime maximum. And for any of those who are considering it currently or have just gone through it recently, $1,000 is kind of a drop in the bucket. I get that. So orthodontia can be pretty easily $4,500 to $6,500. And so that's where the idea of this Willamette HMO really comes in and is an attractive option. If you look down to the major services, everything is $275 copay per tooth. For bridges, crowns, dentures, again, $275, $350. Everything is just pay a copay, 100% covered. There is no deductible. There is no annual maximum. So if you're finding yourself in a situation where, boy, I need 3 root canals and 2 crowns, and that's going to use up all my benefit, it won't on the Willamette Dental. If you're facing a situation where you need orthodontia or somebody in your family does, it's simply a $2,200 copay and it's done. So it will save a lot of money if you're looking at a family with a number of kids, for sure. Dental contribution rates, again, here they are posted. They'll be on the website, and you can talk further with your HR team about these costs. Vision benefits. Offered through MetLife, but they are VSP driven, and most people here are going to be familiar with Vision Service Plan and their network of providers and stuff. So routine exams are just a $10 copay if you stay in their network, which is pretty comprehensive, and they're usually very conveniently located. If you can't choose that, it just goes up to a $45 allowance. Materials and eyewear are offered at a $25 copay, and frame allowance if we need frames, $130 allowance, and $70 allowance if we're able to use Costco, Walmart, or Sam's Club. So out of network, again, it gets a little bit rougher, but still a $70 allowance for you to use towards frames of your choice. So contribution rates going to be posted on the website, and you can talk to HR a little further if there are any questions on what you're currently paying or what you will be paying if you're looking at the voluntary coverage. So voluntary supplemental benefits. We have basic life and AD&D that we can purchase up to $100,000 of guaranteed issue. This is kind of easy. This is highly desirable if you have any kind of a chronic issue, or if your health is less than ideal, or less than where you'd want to see it. But up to $100,000, all you have to do is tell them you want it, and you're going to be issued $100,000. Amounts over that will require a statement of health, and again, typically it's a handful of questions, and they will either ask some clarifying questions, or they will issue it on the spot. But you do have to go through one extra step with filling out a health questionnaire. So spouse life, $25,000 on a guaranteed basis, and again, the same over 25, they require that same statement of health, and children can get up to $10,000 in coverage. Short-term disability pays 60% of your base pay, up to $2,500 maximum per week. The elimination period, whether it's accident or sickness, is just 2 weeks. So 2 weeks thereafter, you can qualify for payments of up to $2,500 a week. That duration goes for 11 weeks, just under 90 days. So and that'll pair up well with the long-term disability package, which again takes up and pays 60% of your base pay of your monthly earnings after 90 days of being out of work. So there's a handoff there. After 2 weeks worth of coverage, or after 2 weeks worth of delay elimination period on the short-term disability, the short-term kicks in, and then we hand over to the long-term disability, and this will take you out to age 65, or Medicare. What's the word I'm looking for? Medicare eligibility. Sorry about that. Voluntary coverage. We have hospital indemnity insurance, accident insurance, critical illness insurance. And again, the hospital indemnity is not tied in any way, shape, or form to your medical benefit plan that you select, whether PPO or HSA. But that doesn't mean it doesn't help you with it. So it has benefits built into it that will pay you if you get admitted to the hospital. It'll pay an additional admission benefit. It will also pay a per diem, and it'll pay different per diems based on whether you're in intensive care or whatever needs that you may have, and it'll continue on. And it pays you those in cash, and again, the cash comes in, and that's money that you can use to help satisfy your medical deductibles, medical copays, pharmacy costs, ongoing costs. So it does take the sting out of it when the wheels happen to come off of your your health vehicle, so to speak. So accident insurance, again, pretty self-explanatory. It just pays you benefits in case you're involved in an accident. That will cover ambulance, things of that nature, air ambulance, transportation to a facility, and imaging. Critical illness, it used to be in the old days that people would buy a cancer policy and a critical illness policy. This critical illness policy is very comprehensive and folds in the coverages for cancer and other dread diseases. And if you qualify, again, payouts can be $10,000, $20,000, or $30,000, and this is paid to you in a cash benefit, and it's meant to not just help with your deductibles and but very broadly your medical care. If you get involved with a major illness of sorts, getting an infusion of $10,000 or $20,000 again can help you take care of deductibles, but also make arrangements for maybe home health care, medical equipment, people to stay with the kids. Our expenses tend to ratchet up in unanticipated ways when major events hit our households. So voluntary insurance and disability plan documents. So again, these will be linked out and posted on your benefits website, so I'm not going to pull these up and go through them. So other supplemental benefits that are of interest to people. So legal documents, they can help with home and real estate, vehicle driving. The estate planning documents are great because the vast majority of us don't have a will, or if we do have a will, it's been collecting dust for about 10 years and it's out of date. So the legal aid is very good. MetLife offers Aura, which is tremendous proactive and always on identity and fraud protection. So identity theft, fraud protection, pet insurance. Unfortunately, we've seen an escalation in cost to take care of our beloved household pets, and so pet insurance is out there and can be of interest to many people. So EAP, offered through TELUS Health, and again, just strictly confidential, offers 24/7 online help with a broad range of things, and a lot of it can be, legal and financial are big things. And what we see these days is by more and more questions, more and more cries for help, if you will, mental health and anxiety, and various stresses on our life just seem to be an epidemic these days. So the EAP is just really kind of a very easy and critical benefit where you can reach out, get a live body, get some help, get referred on, whatever help it needs may be, whether it's financial, whether it's legal, whether it's medical in some way, mental health. And it's their job to help you immediately, point you in the right direction, but then also quarterback the care. So if you need help from a specialist or somebody more focused for long-term care, they will help line that up. So just a great benefit. Retirement 401k offered through Fidelity. You can traditional 401ks are just I take money out of my pay on a pre-tax basis, and it rolls tax-free. You pay your taxes when you retire and start triggering benefits later in life. Or Roth contributions, which again are after tax, but the benefit of that is, and it's good with higher earners or people who expect to have a higher income in retirement. So after tax contributions, they grow tax deferred, and they come out of the Roth IRA tax free regardless of when you draw them. So I maybe shouldn't say regardless of when you draw them, but there are rules for for distributions and when you have to, and limits for when you can take them. But tax-free distributions is the key there. So number of investment options, Fidelity, one of the best in the business. Your contributions, as always through Protingent, are 100% vested. No employer matching contributions are currently offered, and IRS contribution limits apply. So again, you can check with payroll or HR if you have any questions on that front. But just great to have access to a plan like that, especially through a company like Fidelity. So, okay. Enrollment will be completed via ADP 401k enrollment. Go to Fidelity and get started, and you must complete your enrollments by August 24th. And I just know it's human nature to wait until August 23rd or late on August 24th, but yeah, do yourself a favor. We talked about the EAP and stress-related anxieties, etc. Let's try and get them done by August 17th. And then everybody has better mental health that last week, and that goes for your HR folks as well. So here's a broad range of your contacts. Again, I'm not going to go through each and every one of these. They're posted on the website. You can see them anytime. And again, HR has this information. So the big one right there, Brett Hansen, is the point person at Protingent for benefits related questions. Required notices posted on the website for your attention.